Create stock plan. Okay. In stock plan as well, we have three different options. So one is amount based, percent based, and unit based. Okay.
Okay.
Amount based is specific for scenario wherein there is a fixed monetary amount by which we want to give the stocks. Percentage based,
Like what I said, like what I showed yesterday, it is part of the base, like thirteen
yes.
thousand will be the amount fixed. Okay.
Correct. Second one will be based on the salary, like a base pay. Okay.
Okay,
Third
that is
will
like in the incentive one. So it will
be-
be percentage, like 20% of their base pay will be their variable shares and kind of thing. Yeah.
and the last one is unit based, like where let's take an example. There might be scenario wherein I want to just give 5 shares or 10 shares. Okay, likewise.
Like a sign on retention. Usually we say
Mhm.
like 10 stocks as a sign on. Yeah.
Correct. Let's look
Mm-hmm.
into this one by one.
Okay.
Plans will look. Let me open all the three so that you will have.
I also wanted to know in case. So in our company, there were like scenarios. Initially, like for last 5 years, we sustained with ESOPs. Okay.
Mhm.
And we felt like it is not no longer competitive in market compared to our competitors. So we shifted from ESOP to somewhere like a VSOP. Okay.
Mhm.
Like a phantom stocks plan.
You
So
shifted
in
from
such
where to where?
case,
You shifted from where to where?
we had ESOPs.
Mhm.
Okay, employee stock option plans.
Mhm.
Okay, and yes, ESOPs we were having it like once the options are vested, right? And
Mhm.
it will be availed for exercisable, and that can be monetized for them after the exercise period is over,
Mhm.
right? So that is
Mhm.
the basic thing. So we felt like there is a lot of dilution rate involved for the company. So in order to control the dilution rate, right, my company abruptly stopped giving ESOP plans.
Okay.
Rather, we started giving VSOPs. VSOPs is something like a synthetic stocks, right? So ideally, the dilution rate will be really controlled. It can be managed at the same time. Employees also gets a win-win where it will be paid out as a cash valuable. Okay. They need
Okay.
once they're exercising, everything need not it will not be given as an option like a trust agreement. What we do it in ESOPs, we give the trust agreement where they get encashed while they move out of the company after so many years. Whatever
Mhm.
it's been lastly vested that gets exercised, that is those are anything that is exercised are exercisable in ESOP,
Mhm.
and you need not have any expiration date because for ESOP you have an expiry dates. Like usually a stock can be it, it can be available for 7 years. After 7 years, it reaches towards the expiration date. So the management is too much. Like managing the stock plans is like really cumbersome. So looking at that, we stopped the ESOP plan and we started getting into VSOP plan. So
Mhm.
how many employees or older employees who have been given ESOP plan, we still maintained that. At the same time, we created something called VSOP plan for going forward, whatever we are going to allocate.
Mhm.
Okay. In such case, I know like my company has wanted to create and we have the structure involved. How do I create the VSOP plan structure in Workday? That's what I wanted.
So normally see it
Just
is
like, just like what you do now.
yes, correct. Okay.
Okay.
But talking about, as you mentioned, right, like I think you don't want to have the expiration. So in that, in case of the new scenario that you want to, you will create another stock plan, right? You will set up the right set
Hmm.
of eligibility rules that you can see here. And apart from that, talking about the expiration date rule that you can see here,
Yeah,
right?
yeah.
You can limit this. Okay, or you this is not
Yeah,
a mandatory option that you have to use, right? So depending upon your need, you can update these items accordingly.
absolutely. Because for ESOP, we had an expiration date rule,
Mhm.
which is like 7 years from the
Mhm.
date of grant.
Mhm.
And likewise for VSOP, we didn't have actually a expiration rule because the stocks are once that is there is no defined period. And
Correct.
compared to ESOP, the waiting period is pretty there is like it's very intangible And also, whatever when the employee leaves, he gets it converted into cash and he gets settled. Okay,
Hmm.
along with his full and final settlement, this will also gets encashed to him and gets paid out. And if
Hmm.
in case the exercising is, if it is like a public listed company, the exercising time frame will be every quarter end.
Hmm.
Okay, in such case, every quarter end, the employee gets encashed with a value. Okay, so we don't have an expiration date rule for ESOP. I just wanted, like, if I'm going to create a new stock plan for the company, how I can add that stock plan or create a stock plan in Workday. Number one. Okay, so that is something I need to know, and how I'm going to also manage the existing older stock plans. So it will help me to understand the vesting schedules of the older stock plan, and also available of shares and available of share number series of the older stock plans, so I can utilize for the further stock plans that I'm going to create for the company. These are the things I wanted.
Okay. So talking about if in case you want to make any changes in the expiration plan or anything with respect to any other plan that is already existing, right?
Mhm.
So first of all, what you're going to do here is you will make changes, you will edit those plan. Okay. If in case you
Okay,
want to make
okay.
some changes in the expiration plan or maybe in the
Mhm.
vesting rule, right? You have the liberty, you can do it. But some, like there would
Okay.
be, like, for example, you will edit that specific plan.
Mhm.
Okay, let's say I want to edit it as a 1st of August. Let me look into, like, let's take an example of unit-based plan.
Mhm.
Okay, these people have just given a name and like here they have given a vesting rule 3 year RSU is the grant type. They have given as a target amount, right? $10,000.
Okay.
So here they do not have any expiration rule, right? Let's take an example. You want
Yes.
to add some expiration date rule, right? You have an
Yeah.
option, right? Expiration date rule 10 years from grant date, 10 years from grant date, 1 year from grant date, 7 years
Yeah,
from
we
grant.
usually use like 7 years from grant date.
Yeah.
Why?
So if in
Because
case,
like,
let's take an example, there was an existing expiration
okay.
rule of 7 years from the grant date, right? So you can remove
Mhm.
that.
Okay.
So you have that
Okay.
option.
And also, I wanted to understand. Usually, I have something where I can create the documents in my HCM tool. Okay, where in case of any compensation, if there is a merit change in employee, we always send the merit communication letters, like compensation letters. How do I create it in Workday? Like, to get it automated and send it on one particular date from the from my HCM tool directly to employees' IDs. Do I have an option in Workday?
What type of document you want to send?
So usually when there is a revision in compensation for employees, right? Say, like, let's take an example, annual compensation. When there is a merit change,
Mhm.
once the merit change is done, employees get their new compensation, right?
Mhm.
Based on the percentages calculated. After
Mhm.
that, there is something to communicate. It is rightful that we need to communicate to the employees by giving them the compensation letters, like saying, like, this is your revised pay and this is the breakup of your pay.
Mhm.
After every merit cycle, as an employee will be getting it. So how do I create the merit letters, like the compensation letters for all the headcount, and also for in in case of stock plans, and also for trust agreements that I'm creating, right? While I'm granting the stocks, I will give them an option agreement, like, hey, this is what your entitlement is, and this will be your vesting schedules. You're entitled for these many amount of stocks based on the stock price at the date of your grant, and this will be your expiration date, and so on. So there will be an amendment letter that usually for every employee, whoever we give the stocks, we give them. And also, once they are ready for exercising, right, we give them the trust agreement also, or like, not like a trust agreement, we give them the exercisable agreement as well. Okay, giving
Mhm.
all the vesting schedules also monitored. So we usually maintain something like a communication letter for all such
Mhm.
compensation any changes, even €1 is getting changed for an employee, I have to give them a compensation letter communicated to them righteously. So I don't want to keep doing this. Anyway, we have such templates already in say like we maintain a Google or Word document. But the thing is like I don't want to go and redirect, and I don't want to do something like a macros function. You remember in Excel we can do a macros function where in Outlook
Yeah,
it
correct.
using the macros function it'll get distributed to each of the individuals like an one-to-one discussion type of letters, right? I don't want it to. We are not using Outlook, so I cannot get the help of macros here. Okay,
Mhm.
I wanted to utilize Workday HCM just like how I do it for Personio. In Personio, you have an option where you can just, if I'm going to send a compensation letters, you can send it to everybody. You need not take a macros edition. And likewise, even in success factors, you don't need to send it through a macros. You can use it via success factors. So it'll get into each of the employees HCM handle board. Okay. For example, if I am the employee, I can also maintain my own profile, right? Like I can apply for leaves and I can look for my absence request. I can see my salary plan and I can see my salary. I can download my salary slips. So I can access the Workday HCM as an employee for my own profile. So under the documents, usually I also get anything on the compensation letters. I get that automatically uploaded there. How we do it is usually we send like thousands of letters to all the 1,000 headcounts, and for each of the employees under the individual profile section under the documents it gets uploaded. So I need not depend on a mail, and I also give the employee the accessibility to download the documents whenever he wants it. How do
So,
I create the compensation letters?
so here we have multiple options, right? Like we can create a drive. Okay, I'll come back to this later, right? Like we in Workday as well, we
Yeah.
have option, right, wherein we can create the document. Like you can design the template if there are, like you are mentioning about the changes that is going to happen or the new items with respect to the compensation, right? Let me see if there
Mm-hmm.
is any existing document. So normally, depending upon our requirement, we can create different type of documents. Let me see.
And also for a certain amount of stocks, right? When I'm creating the eligibility rule, so, as you mentioned, I can just choose the eligibility rule as job level also. So, it will round out if I'm going on a percentage or amount based, whatever the plan can be. Okay. If it is aligned with the job level, I can choose it as an eligibility rule. So, the system will automatically filter it and give the allocation automatically to those particular employees alone. Right?
Correct. Correct.
Okay.
And
Okay.
it's not always mandated to use from the job level perspective only, right? You can use it on
Mm-hmm.
any basis, maybe depending upon the hire date or maybe depending upon the organization or department, anything. It's not only about the job profile. Job profile is one of the item that I gave brief to you.
Okay, let's talk like I'm giving a stock incentive plan. Okay,
Mhm.
for the annual. For 2023, I'm going to do it for 2024 mid. Okay,
Mhm.
and I know like I am my first eligibility rule will be employees who joined in 2023 on or before 30th of September. That will be my first eligibility rule. Second will be select the job level. So it will automatically filter individuals percentage range or the amount based range. For example, if I'm having a L1 is getting like 30 percentage of their base, and L2 is getting 20 percentage, and L1 is getting 10 percentage of their base, right? So in such case, the system will be automatically filtering if I'm going with the employee job level and also the hire date and also with the departments. That's what it bifurcates, and also with the country.
Yeah, so see, in the eligibility rule, you have multiple. It's not only about there is only one criteria that you can put in, right? You can put in multiple criteria, either this or this or this or this.
My
So if
question is, at the time, I can also, in eligibility rule, I can choose up to 5 to 10 criterias at a time
you
to
can,
have a more
there
robust
is no
filter.
limit in that. You can check,
Okay,
have hundreds of criteria that you wish to have, but you have to make sure like the
okay.
criteria that you are creating, it's correct. Okay. And,
Exactly, because we have to
yeah.
go with the frequency, and also we have to go with the last promotion date. If I wanted to nullify the last promotion date because we plan
Mhm.
to do those who got promoted in off cycle,
Mhm.
mostly companies will do like we will nullify the merit cycle this time. We do a
Mhm.
separate merit increase process for them.
Mhm.
Okay. Because just because they were recently got a hike or something, we just bifurcate with our regularized model, and we have such structural increase. Sometimes we give the structural increase through share points. Okay. And because some employees or leaders, they definitely don't want to get more into their base considering the taxable amounts. So for taxable benefits, they also have it like readily income to cash, like deferred, or we can also go for stock plans for longer retention value. So in
Mhm.
such case, I can do that, right?
Yes.
Okay,
But
okay,
one thing you
that's
have
what
to
I
keep in
wanted to
mind
know.
is all this eligibility rules should be created at the initial stage only. If you are going to make any changes at the later stage in the eligibility rule, so in that scenario, if in case those items like the merit cycle or the plan has already been triggered for that worker, it will not work.
What do you mean? So, for
Let's
example,
let.
I'm just asking. Let's. My question is, so in 2023, I have a different eligibility cycles, right?
Mhm.
The eligibility creation, whatever I created for 2023, will not be accurate for 2024.
Correct.
Okay, so 2024, I'm starting with my merit cycle program. So
Mhm.
I'm going to create the stock plan, and I'm going to create everything for that particular number. I'm going to keep every those series as 2024 for my identification. While I do it itself, while I create such stock plans or while I create such compensation or bonus plan, during that time itself, I need to set the eligibility rule.
Correct.
And in case I wanted to edit the eligibility rule for later point of time in between, if there is some differences or we need to do some adjustments, right? In such
Mhm.
case, how to do? I can edit the stock plan
So you
and
can
add
edit
the
the stock
eligibility
plan,
rule.
you can edit the eligibility rule, but if in case
Mhm.
that plan is already in progress with respect to some worker, then you have to cancel those plans. Okay, let's take an example.
Okay, okay.
The merit plan was already initiated.
Mm,
Okay.
mm.
But after it was initiated, later on you got a requirement like you have to update it, the eligibility criteria. You have to exclude some workers from that. Okay.
Exactly, because it
So
happens usually in merit
yeah.
plans. Yeah.
So in that scenario, what you have to do is, let me show you one simple. So that event will be in progress for that specific worker. Okay.
Hmm.
So in that scenario, first of all, you have to go and you have to delete that event that is already existing. Okay. And after that, you can update the eligibility rule. Like normally we have mass cancel or mass reset. Mass cancel
Okay,
business process.
okay,
So let's take an
okay,
example. I'm talking about specific business process. Let's take an
hmm,
example of performance review or compensation.
okay,
Like compensation review process that you started, right? So let's take an
mm,
example. There was some changes that I'm supposed to do. So what I will do will cancel for all of them. The review process that was
okay,
initiated. So here, mainly what I will do is I will select the timeline, like when I exactly started them. So in that scenario, only I will
okay,
get the list of all those workers. Okay. And here, when you will click OK,
okay.
no event written for this criteria. Actually, there is no event right now in the system. Choose 2020. As of now, this is the practice tenant, right? So we do not have any
So,
compensation review. But first of all,
okay,
once you click OK, this will give you list of all the workers for whom the compensation review is in process.
okay, okay,
So you will review that and
okay.
you will observe, okay, I have all the items, and you have to go ahead and you have to just give your reason why you're canceling this, and you have to click OK. By that, it will automatically cancel from all the workers. And after that, you can update your eligibility rule and you can reinitiate the compensation review process.
Absolutely. This is
Okay.
understandable.
In
Okay. Now
case
I understood.
this is for
In
the
case,
scenario,
in case,
this is for the scenario wherein the event is in their inbox and they have not completed it. If in case some of the worker has already completed those events, so in that scenario you have to
mm-hmm,
resend that. You will you will not find those workers in the cancel mass cancel. So in that scenario you
okay,
have to go to mass resend business process and you have to
mm-hmm,
select the business process here and you have to
okay,
resend. So normally it's always better.
okay.
So normally the best practice that we do here is, so normally we test all these items at the
So
initial
what is the
stage.
logic of recent?
Resend means deleting.
Okay, okay.
The
And
reason why
and what
Workday
is the
does not
difference between the
use,
cancellation and resend? Both,
yeah,
I feel like both are the same, right?
okay, so cancel means, let me show something in some
It
workers.
cancels, but it still keeps in the system.
Let me
So
give you,
you can retrieve it.
no, let me show you something.
Okay.
Let's take an example. This is a worker. Okay.
Mm-hmm,
If
mm-hmm.
you go and you go to the worker history, job and worker
Okay.
history, here you will find list of all the events that is going on
That
for this
happened for
person.
this.
Okay.
Okay.
So if any
Yeah.
event, any business process is already completed, okay,
Mm-hmm.
here you will not get an option of canceling. Cancel means
Okay.
something which is already in progress and it is not completed. So that is the reason why I'm
Okay.
getting this recent option. Okay.
Okay.
If I resend this completed item will be gone. This will be deleted. The reason why
So it
Workday
may
does
it
not
means like
use,
it never happened for him itself.
yes,
It
correct.
completely deletes.
Yeah.
It shows
But
like it never that event never took place.
correct. The reason
Okay.
why the Workday does not use the delete option here, because we are deleting it, but still Workday is not using the word delete here is because this transaction will still be there. You cannot delete this event from his worker history, right? This will be
Okay.
resended. This transaction will be deleted, but it will still be there in the worker's profile or in the worker history. Okay, that's why Workday does not use the word delete because delete means getting it off completely, right? Like this.
Okay. So the thing is like ideally it cancels the event, but it'll
No.
just
This
remain
is
as a
about
history.
recent. This is about recent. Let me show you the cancel one as
No, no, no. The thing is like in the event of recent,
well. Mhm.
it resends it, but it wipes off the history, but it keeps the record. The record
Correct.
is there, right?
Correct.
It'll sorry. In fact, it wipes off the event, but it keeps it in the history.
Correct.
Okay, okay.
Okay.
But if it's cancelled, it is cancelled, and it is not even the history is not backed up,
No, in cancel
right?
as well, you will have the history. Let me do some compensation change for this one. Okay.
Okay.
I will go to actions. I'm just changing a location. I'm not doing anything related to compensation. I wanted to change
Mm-hmm.
his location. Let's take an example for this worker. This is okay, change location.
Okay. Are you there?
This is getting submitted.
Okay.
This gets submitted means, let me see. So normally if there is any event, let me initiate something. Sound.
Yeah.
Actually, the main issue with this practice, okay. So there is an error, right? Process definition error. Okay. Right now, if you go to the
Okay.
related actions, you can see
Mm-hmm.
this. There is a cancel option. There is a correct
Yes.
option. Okay. So this
Yes.
cancel options will come into picture when the event is not completed. Okay.
Okay.
When the event is still at some stage or still it's in progress stage. Okay. At that point of time,
Okay.
you
Okay.
get an option of cancel. Whereas if in case the event is already successfully completed, here you will get an option of reset. Okay.
Okay.
So this is
Result.
the main
Okay.
difference between uh, cancel and reset. Cancel means
Okay.
something you
Okay.
initiated, it is not completed. So you can cancel that. If in case something is already
Okay.
completed, but again, there is a limitation with some type. Let's take an example. Employee is hired. Okay.
Mm-hmm.
Once the employee is hired and you want to cancel his hire.
Mm-hmm.
Okay. So up till
Mm-hmm.
some point of time, you will be able to resend that. But if anything comes into picture related to payroll, okay, let's take an example. A worker is hired, right, and his first payroll is processed. He didn't get a pay, he got
Okay.
a $0 payment, right? But his payroll was still
Okay.
processed. After that, you will not be able to resend that transaction
Okay. Okay. Got
because
it. It remains in the history.
yeah, it will be there. You do not have any option to resend that. Okay. In that scenario, you have to do only one thing, you have to terminate it.
Okay. Okay.
Reason being, now you cannot delete the payroll related data. Okay.
Yeah.
Because his hire got linked with payroll. So now you do not have an option to delete that. Okay. So in that, because mainly such scenarios happen. Like normally what happened is in multiple scenarios, like the
Yeah, I understand. Like it
worker
happens even
didn't,
in
yeah, worker
Personio.
didn't came on the first day, right?
Yeah.
And
Like
let's say
no call, we call it as no call, no show.
no,
And
no show,
yeah,
yeah.
it happened in Personio also. It has the same problem. Like it'll where we have to show you that employee has been like terminated
Hmm.
just because we cannot resend. Yeah, now I got a picture.
Okay.
So in such case, you can do the resend option.
Correct.
Absolutely. Fantabulous.
Okay. Now
So
coming. Hmm.
yes.
Yeah, go ahead.
Yeah, for the create stock option. So you said like if I want to create a new plan also, I will go with this option only, right? And I will set the eligibility rules at this moment.
Yes. So at the starting
Okay.
point of time only, it's better because see, we do not want any unwanted transaction to be at any level. Okay. We
Okay.
want like all the transactions or all the items that we have in place. It's correct and accurate one, right?
Why I'm asking is like for management board, right? The common stock option plan that we give for our management board members, right?
Mhm.
Based on the individuals during the time of hire, based on the individual employee contract in Europe, we give that vicinity for the employee, and we give the option for the employee to choose what they
Mhm.
wanted. So in my case, I have like 6 board members. Okay, all the management, CFO, CRO, and CTO, right?
Mhm.
All the C levels, they have each has different of plans as per their employee contract during their sign up as a board member. Okay, soon as they get an option where 50-50 can be like 50 percentage of shares out of the 100 percentage of their variable share of their base, right?
Mhm.
They can have they can choose for all the 100 to be converted into shares. Okay, and for few management boards there will be like 50 percentage of shares and almost like 50 percentage of cash which is deferred. Okay, deferral cash, and few have chosen like 2/3 of deferral cash and 1/3 of shares. Okay, and on
Mhm.
top of it, They also have like 300 sign-on bonuses for their exceptional performance. This is like apart from the target, right? They
Hmm.
have something as a board members, they have an additional allocation, like departmental wise and also one for their role wise. Okay. For the role wise, we give them the L tips, which is like overall like 300 L tips, like L tip shares,
Hmm.
where each of worth of a higher amount. Okay. And also we wanted to give them the two-third and one-third. So each of, say if I'm having like 10 members, I can manage it. Okay. I'm talking when I'm going with the larger plans, when my plan, the similar plan is not only for C levels, but it's going back till my SVPs. So for the 50 SVPs or the 50 directors, if I'm having a 30,000 employee head count, it will be like too risky for me to handle those things. So how you do that? For
You're referring
for
in
each of
terms
the
of.
stock plans I'm having,
Mhm.
each one having individual stock plans option based on their employee contract, right? So one has two-third of shares and one-third of cash, and one has like 50% cash, like deferral cash, and 50 percentage of stocks. How you maintain that under the employee?
So you can see this option here, right? Eligibility rule. Okay.
Mm-hmm.
Let's take an example. You have different group of workers, right? At the same management level in a different scenario wherein the target amount or vesting, anything changes, right? So within the same
Yes.
stock plan, what we will do is we will introduce different type of eligibility rules. Like for this eligibility rule, this is going to be
Okay.
the target amount, this is going to be the grant type, this is going to be the vesting rule. Apart from that, if there is anything expiration related, right? We mention all the items. So let us discuss this one by one so you will have a better idea. Okay.
Also, I have one more thing. Okay.
Mhm. Yeah, go ahead.
Usually, if we have like for all the investors, right? For example,
Mhm.
sometimes we have like employee stock pool, right? We
Mhm.
have two types, and also based on our investors, we have like say like we have two investors, we have like two trust agreements, like two different group of trustees. Okay, we call
Mhm.
it as trust pools.
Mhm.
In case, for example, we have trust pool A and trust pool B as a company name, right? So
Mhm.
few employees will be given the trust pool A and few employees will be trust pool B. Usually I get that in ShareWorks. Okay. How I get it populated in, how I can just define or create such option in Workday, where it also bifurcates based on the trust agreement or the trust name or pool name.
So see, as I said, right? So for those two separate trustees that you are mentioning, we should have a different plan in place.
Okay,
Because that's what
okay.
mainly we segregate each and everything, right? So so there will
Yeah,
be number of stock plans, but yeah, again, rather than having multiple stocks plan, if in case there is like you mentioned about trust A and trust B, right? I will create a plan,
yeah.
a stock plan for a trust, right? Wherein I will segregate the options that I have here, I can define for the
Okay.
trust A and trust B within the same one. So likewise, what I will have is I will have limited number of stock plans, and the reason being why it's better to have limited number of stock plans is because if in case like every year there might be some changes that will come into picture, right? Whether we talk about target
Yeah,
amount, anything, right? So it will be easy for us for the changes that we are going to
bifurcating
make.
it.
Yeah.
Yeah. Okay, okay.
Okay. Okay. So coming
So
back.
now,
Yeah.
yeah, yeah, go ahead. Yeah.
Okay. So coming back to the stock plan, as I said, like we have three different types. One is amount based, second one is percentage based, third one is unit based.
Okay.
Okay. So talking about this stock plan, okay, the
Mm-hmm.
options remain same, like allow target override means if in case there is anything, because normally,
Between the
yeah,
percentage, yes, it can be adjusted accordingly.
yeah. So normally we use this checkbox for most of the stock plans, wherein the chances are there that it will go over the target that we have. Okay, because we will
Okay,
find the
okay.
target at the bottom if in case. we feel like, okay, for this stock plan, there are chances like it will go override. Because if we do not use this checkbox, later on, we will not be able to override that specific uh,
Okay, okay.
amount that we want. So at the initial stage only, we will be aware, right? Like what are the chances whether it will go override or not. So depending upon that, we will choose this accordingly. Okay.
Okay, okay.
Talking about compensation matrix. Okay. Compensation
Mm-hmm.
matrix. Let's take an example. You want to give stock plans, right? Depending upon their performance, right? Depending upon their merit cycle or anything. In that
Let's
scenario.
say like a total value compensation matrix. For example, I showed you the Excel sheet, right? That is
Mhm,
not based on the performance.
mhm,
So out of 1,000, if an employee is given 105,000 as a basic total compensation,
mhm,
where 92 is their base and the remaining 13 can be their stock plans, which is paid out in stocks. But it's still the part of their total compensation. That is irrespective of the employee's performance.
mhm.
So in such case, I have to choose the total value compensation, right?
So normally what you're referring is, if in case you want to give the stock plan as a base of your total compensation, your total rewards, correct?
Yes, yes, yes. That's what I'm
It
telling.
depends in that
So
scenario.
in such
Mhm.
scenario, I can choose the total value compensation matrix.
It's not mandatory always that I will choose the compensation matrix, right? It will
Okay.
depend like the amount that you are talking about. Let's take an example. That amount is completely based on of there is a specific amount that you want to give, or you want to give something with respect to the percentage, right? That is something will
Mm-hmm.
come into picture. So this total value compensation matrix is like wherein we have, let me show you back.
So, for example, uh, if the employee's total compensation is 105, okay, and 10 percentage of that 105 is their equity by
Mhm.
default. This is not entitled with their performance. This is something they have to get it either the person is performing or not. Okay.
So in that scenario, it's not mandatory to always use a compensation matrix, right? You have a percentage based stock plan, right?
Yeah.
So you can define
So
here
I
the
can just
percentage.
10 percentage. The
Yeah,
by default it is like 10 percentage.
correct.
Okay, I need not do so it will be much more easier. Okay,
Yes.
okay, got it.
Okay. So that
Okay,
is how mainly we can do. Okay.
okay.
So now we are talking about so compensation.
I have a question.
Mhm,
Sorry to break you there. So the 105 is the total comp, okay, and 92 is the base. If I'm putting 10 percentage here in the in, can you just scroll little bit down? Can you just scroll down, please? Yeah. You are showing somewhere around like target amount. Yeah. So in case I'm putting 10 percentage here, so will the system take the 10 percentage from the 92 base or from the 105 of total compensation here?
When you see a compensation basis, total
Okay, this
base
is
pay.
total base pay. Right? Total base pay means it's 92. What if like
Yes.
total compensation?
So here you can create a compensation basis where you can choose the total whatever you have. It's not always mandatory to choose the total compensation. You can choose the total compensation part.
Can you just this is the yeah that's what can you just show the total compensation? Okay, this is what I wanted because always we go with the total compensation, total target compensation, TTC. Okay, we don't go with a base salary. Some
Mhm,
companies use base salary. We use
mhm,
performance percentage is based on a base salary,
mhm.
not on the total compensation.
Yeah.
Okay, but this is part the 13,000 is a part which is 10 percentage of the total compensation, and the remaining is 92 gets paid out in cash.
Mhm. So that's what I'm saying,
So
right?
here the
If in case you don't
mhm,
want to consider it based on the base pay,
base
you
pay,
can go
you
with the
can go
option
with the
that is
top.
available, like total compensation, right? Or
Okay.
there might be different scenarios, right? Like if I give you an example of India, right? They have the
Mm.
basic pay, right? There are different component by which they want to give. So depending upon our requirement or our need, we can change this compensation basis. This is the mandatory field if you see, because this is what something on which the amount, target amount is going to be decided. Because giving target percentage is 10, that will not make sense if I do not have any base point, right? So that is why
Yeah.
this
And in
compensation
India
basis.
also sometimes we use HRA as one of the compensation basis. Why? Because to reduce the tax liability for the employees, we also go with the HRA.
Correct. So you can
Okay.
have the HRA as basis.
Okay.
Okay.
So these are the built-in options that we have in the compensation basis.
Yeah, you have an option to create it as well if in case you want to
Okay.
create configurable compensation basis.
Okay.
So you can create a role. Okay. You can give
Okay.
the name, you can define the eligibility rule. In the functional area,
Mm-hmm.
you have to define like wherein you are going to use this, whether it's going to be in benefits, compensation, as we are going to use in compensation. I will define that. Okay. Talking
Mm-hmm.
about this compensation basis that we are going to create, right?
Mm-hmm.
Where you are going to use, whether you're going to use in the stock plans, right? Whether
Mm-hmm.
you're going to use in the salary plan or a period salary plan, allowances plan, commission plan. There are different.
Is period salary plan more like a deferral, like an
Sorry,
accrual basis, right? What is the period salary plan? So it will be like accumulated like an accrual, is
correct,
it?
correct.
Okay. Okay. Like futuristic payments in
Hmm.
multi-year targets. Okay.
This is how you can create. So like normally there are different calculation bases that is available. Like if in case you want to define the amount, right, depending upon some guaranteed basis or variable basis or a fixed basis. So likewise as well, we can create. We have the option.
Okay. So in case if I choose the calculation basis as variable basis, it will automatically calculate with the given threshold values of the variable,
Correct,
like 100
correct,
percentage or something. Okay, as a min
correct.
and max of threshold. Okay,
Yes.
got it. Got it. Thank you.
Okay.
So coming back to the stock plan, yes.
So coming back to the stock plan, so we can use the compensation matrix in different scenarios. Like normally,
Mm-hmm.
as I said, right? Like if you want to use this stock plan at the initial scenario wherein you want to offer this stock at the time of hire, right? In that scenario, you
Mm-hmm.
no need to use any compensation matrix, right? You can use
Mm-hmm.
the
Unless this is not based on performance-based stock plans, we need not use the compensation matrix. That's what you
correct.
tend to say. Okay, got
See,
it.
talking about the first one, right? The first one is talking about the flat amount based. Okay, here you will not
Mm.
see anything mentioned as amount based. This is something which you have to understand. So in the amount based, here you can see we do not have compensation basis because this is a stock plan that we
Okay.
are referring wherein we are going to give them some certain amount like 100,000 or 10,000. We have to define the currency, right? After
Okay.
after that, we will define the grant type, whatever we wish to have. Let's take an example, ISO. Okay, here
Okay.
we will define the eligibility rule if in case there is only one item. Okay, but let's take an
Okay.
example. I am creating like new hire stock plan. Okay, for
So this is like sign on. Can we
management
mention it like sign on?
for
Okay.
management level uh, SME. Okay, or anything.
Okay. Okay.
Okay, so for this group of people, if there is any, so there are three options. One is stock plan defaults, stock plan profiles,
Mm-hmm.
stock plan documents. So let's discuss about stock plan default. If in case you have only one item for all, like
Mm-hmm.
for all the SMEs that you have, right? There is a fixed stock plan option for the target amount of $10,000, right? You can define the
Okay.
currency here.
Mm-hmm.
Okay, the frequency is going to be annual. Okay,
Mm-hmm.
you can define the grant type, vesting rules. Okay,
Let's keep it like 4 years.
4 year.
Actually, for incentive stock options, we never have a vesting rule.
So it's not mandatory field, right? So you can ignore that. If there is any expiration date rule, you can mention that.
So
Uh,
these, for example, the 10,000 will be immediately vested for that particular year and can be encashed for them.
correct.
But the thing is, like we can have it like an exercisable rule, like quarterly exercisable. that can be created.
Yes.
So, for example, the 10,000 is a backloaded vesting. Okay. Or let's keep it like a front-loaded vesting. 10,000 worth of shares. Okay.
Mhm.
Today the share amount as a public stock is 7 euros. Let's keep it as
Mhm.
7 USDs.
Mhm.
Or round up like 10 USDs for better math. Per stock value is 10 USD being a public listed company. And this management board is given like 10,000 worth amount, 10,000
Mhm.
USDs as their thing. So 10,000 USDs worth of shares will be calculated. So 10 into 10,000 you calculate it. So there will be a
Correct.
specific amount like 100 stocks will be given for them. The 100 stocks will be given for this employee at every like 25 at every quarter. So
Mhm.
that is how we can create that grant split here
Mhm.
in such case.
Sorry, what did you say? The grant?
So for example, the stock is worth 10,000 as a public
Mhm.
listed company. The target amount is 10,000.
Mhm.
Okay. So the employee is eligible for 100 grants
Mhm.
for that particular annual, right? As an
Mhm.
incentive stock option.
Correct.
So we are doing like a front loaded vesting.
Mhm.
So first two times he gets 25, first he gets 15, another 15. And the second month onwards, he gets, on the third and fourth quarter, he gets 30-30. Okay. So
Mhm.
in such case, that is called as front loaded vesting. So the initial vesting will be lesser. And at the end, it will be like too much of the value. Okay. In such case, how you give that grant split for the employees to be paid out periodically in every quarter?
So normally in that scenario, what we can do is we can ignore, we can keep this default as it is. Okay. In the
Yeah,
stock plan profile.
target amount, it's not at all a problem.
No, no, no.
I'm asking the split only. Yeah.
Okay. If you talk about the stock plan profiles that we have, let's take an example. Here I can segregate
Mhm.
it further in multiple options, right? When the worker, can you see the eligibility rule here? When the worker is joining,
Yes.
at that point of time, this is the amount that he is going to get. Further, right? And for this
Okay.
specific one, he will have a vesting option, right? Or any expiration date. Once the worker completes
Yeah.
3 months or a quarterly, right? What is the next amount that
Mm-hmm.
he is going to get? So based on that,
So the question is the quarterly will be under the vesting schedule option or in the eligibility rule option?
so you are referring like talking about the vesting one, right? Like how they can vest the whatever amount they are getting into multiple ways, correct? Like every quarter they
Yes.
can vest around 25%.
So here the ideal option will be 1 year quarterly. The first option, the very first option.
Like for example, as I briefed you, right? So normally within this, what happens is, if you can see here 5 years, 20% vesting. So in a similar way, we can create our own vesting option, right? Like for example, let me make changes to this. Did you check whether you have the Workday community access?
No, I haven't. I have to check.
So if you see here in Workday, right, there are different options that they have here, like for vesting, right? Like let's take an
Okay.
example. What is the vesting schedule that you are referring about?
So let's say like a front loaded vesting. Okay. So 1 year every quarter, front loaded. 1 year every quarter.
Okay. So normally you can
Okay.
see here.
So, and I
Mhm.
also wanted to define the percentage because front loaded will be the first two quarters will be paid with lesser value.
Mhm.
Okay. The last two quarters we pay like higher value. That is how
So
the
see, I will tell
front
you
loading
about
starts.
the limitation that you are talking about, right? So if you
Mm.
see here, right, stock vesting schedule, the options that we have here, we create it. Okay. After that, the vesting that comes into picture, right? Like talking about the amounts that uh, uh, gets loaded into the worker's profile, right, for the vesting purpose. This is mainly done through the EIB. Okay.
Okay, okay.
I will do one thing. I will check. I'm not sure whether we have the existing EIB.
Yeah, it will be wonderful because that is something we do it commonly here. Because any vesting stock plans, we need to understand whether it's a backloaded or front-loaded vesting, because that gives us the creation of whether it's a retention part of the retention plan or not.
Okay, I'll brief you about the EIB in next session. Okay, because it
Okay,
will not be done right now. Okay.
no worries at all. Let's close this first.
Mhm.
And so in stock plan profile, I can create the grant split based on the grant type and the
Correct.
eligibility rule, and also the vesting schedule. The vesting schedule, like how you taught me right now, like you can create a vesting schedule and you can do that,
Correct. Apart
right?
from that, if you wish
Okay.
to have any expiration date rule, right, you
Yeah,
can
we
do it
can choose
accordingly.
that. Okay, okay.
Okay. Similarly,
And
talking
what is the
about,
percentage of target here that is mentioned here? This will be, so
so
we
the
already
target amount,
created the target amount, right?
the target amount that we define here, right?
Yeah.
Let's take an example, 10,000. Okay.
Okay.
So here we can define the percentage of target, whatever are supposed to be, let's take an example that is supposed to be delivered, right? This is the target
For
amount.
every quarter.
Yes, correct.
This is what I wanted. This is what I was asking.
Mhm.
So, for example, the 10,000 worth stocks, if the
Mhm.
stock price is 10 USDs. So the employee is worth of 100 stocks, okay,
Mhm.
which will be split into 25 percentage each. Like
Correct.
first month he'll get 25, another other quarter he gets 25, another quarter he gets 25, and other quarter he gets 25. Now I wanted to have a breakup here. I don't want to give him 25 worth stocks in each quarters. I want to give him only 15 and 15 in first two quarters. And the last two quarters, I wanted to give the double, like 30-30. So in such case, I can just add the add option, right? And
Correct.
can create the rule.
Correct.
Okay, this is what I was asking. Okay.
Okay.
Because
Now,
this is what a front loaded or back loaded vesting, I can do it. I need not create something abruptly, right? It is very well there, just as an
mhm.
additional option. Okay.
Talking about this document part, right? If there is any reference document that is supposed to be used,
Like the
right?
compensation letters I have mentioned, right? Like the stock letters, those will be
No, so
automatically
this
there.
is the default document, a standard document for all the workers who will be getting this as a this stock plan, right?
Like a template.
Correct. Here you will
Okay.
not have an option to auto default anything, right? Let's take an example. Normally, if you talk about the offer letter that you get, right? So when the
Yeah.
offer get generated, that gets generated for a specific employee, like his name, his details, and everything, his start date, everything will be mentioned. That will pop out automatically. Here, that option is not available. Here, it will be a common document, right, with respect to the stock plan, which will go to all the defined worker, whoever is eligible for that plan. Okay.
Yeah, it will not, you meant to say that the letter is not specific to one particular person listed his name.
Yes.
It will be like to whomsoever,
Yes.
right?
Correct.
Kind of thing.
Correct.
Okay, okay, okay. So that is what my question was in the initial when I asked like how we create a compensation letter and write it through Workday for all the employees in one go. Why?
Okay.
Because this is
No,
like
so
more
I thought
generic
like
letter.
you wanted to have some another document which goes to separate workers with their name and all. So that's what I thought.
No, 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 no. Nothing is like, see, there are like two things. Whenever there is a merit cycle,
Mhm.
right? Once the compensation is changed during
Mhm.
the merit cycle for the employee is entitled to know what is his new compensation. So
Mhm.
we usually circulate a compensation letter. That is a closure of saying like this year's compensation, the merit annual cycle is over, and this is what you have got as your merit. Okay, by we close the cycle by completing it through a compensation letters sent to individual employees. Usually how we do it in using success factors is in success factors there is an individual thing where the system will address just like how you send individual letters using macros, right? Through Outlook. Here, the system will do it using Google, and the success factors will send by automatically typing individual names and their ID and their new position or the existing position they are under, and they circulate individual annexure forms like compensation letters and send it to their email, or it will also get automatically uploaded in the employee's document folder.
Okay.
So if you are an employee, right, once you got your merit cycle, okay, your HR will be sending it to your workday profile. You will be, as an employee, you can check your absence, you can also do your time tracking and all in workday, right, as an employee of the
Yes.
company. So in that you also have something called documents where you see your monthly salary pay slips and also other documents like your increment letters, incentive letters. Those letters usually we create it as one go and send it to the employees, so it gets restored in the employees document folder. I
Yes.
wanted to know how you send it. The same things, if in case I'm sending any stocks, if you're awarded any stocks, those stock letters also should be there available in that employee compensation document sector. How do I
Yes.
do it
Obviously,
and
this
send it?
document that we are looking into, this will be available in the workers profile document section.
Absolutely. How I do it?
So normally, if any worker will have access to the document section, right? Like normally, if you talk about workers, they have the access to this document section. Let me show you. Like for example,
I know where the document section is, Raj, and my question is, I have to create as a compensation person, right?
mhm,
You're talking from an employee perspective. I don't want you to talk from the employee perspective. I wanted to, let's flip the cards now. Okay. I am the employee. You are as a compensation manager. You're going to send me the compensation letter of
mhm.
what I'm getting this year. How you create that?
So that's what I told you, right? That is being done. We have to configure the entire document, right? That happens through the normal business process, right? I will show you like how
Okay.
the.
Usually we create it during the integration part itself, right? The documentation.
So it's normally we have an option like we can create a document in the drive, okay, Workday drive that is available, right?
Okay.
And there we can have those respective fields that I mentioned to you, right? That is available, right? If you want to define any specific change in compensation, the workers
Mm-hmm.
related information, or we can have a proper template type, right?
Okay. Okay. And I also
Basically,
have
I
a
do not have
question.
an option, right? Or I do not have access here. But I will try, but I will show you like how that is created in the next session. Okay.
Okay. Why? Because I don't want this to be falsified also. So usually we have version URLs.
Mhm.
If you would have used DocuSign, you have DocuSign's URL just for encryption. So usually such documents can be auto encrypted using the HCM tools we are using. Okay, using the version aspects. So
Mhm.
I just wanted to create such a compensation letter that at the end, at the corner of the sheet, it automatically have the version URL of the workday. So it is like more encrypted. The document is so encrypted and legit.
Okay.
Okay, this is what I wanted to do. So today I will practice this stock plans and I'll come
Mhm.
back with the questions tomorrow. Okay.
Okay, sure. In the
Yeah.
percent-based plan, there is nothing yet. For the percentage-based plan, you have to define the compensation basis, right? On which
Okay.
basis you want to decide or define the percentage. Okay. And
Okay.
in case of unit-based plan, you have to clearly, you will not have any other options, right? You will just have a compensation matrix if you want to use, or else you have to define the target shares in the form of numbers. That's the difference, major difference between
Okay.
all these three different type of plans.
Okay, got it. Got it.
Okay.